Well, we all know that the Feds continue to raise interest rates, trying to control inflation. And as the Wall Street Journal would say, the market recovery hinges on a quick inflation drop. We're going to talk about four different components, how they relate together, and give you a picture of what's going on with inflation and the headway that's being made.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hello and welcome to the Trending Report. Today we are going to be taking a look at data as it ended on January 20th, which was last Friday. As always, we will assess what's going on from the viewpoint of capitalization, from the viewpoint of the various sectors. Also, we'll take a look at the bond market and we'll look at international equities as well. But more importantly for today, I want to also dive first into what we're looking at coming out of the gates in 2023. And as the Wall Street Journal would say, that this market recovery is going to hinge on a quick inflation drop. The fact that things have been starting to head in the right direction has kind of buoyed the market, so to speak. At least that's the interpretation of many economists, as is reported here in the Wall Street Journal. But what I want to do is spend some time and make sure that folks have an opportunity to understand how this all fits together. So I'm going to take four different components and kind of assess that, or at least explain it and tie them together for you. So up here in the upper left, we have the United States inflation rate. And as we all know, inflation is the number one issue economically in the United States right now. And here is the inflation line as of late. Inflation capped and hit 9.1% right here at its high point. And that has been just kind of a scream on the way up. Now, because of that, the Feds have been raising interest rates. And the point is they wanted to turn this, which is what you can see they obviously did right there. And that coincides with this next chart down below, which is the United States Fed fund rate. So as you can see, right here is where they started to raise those interest rates. So right around in here is where they started to raise interest rates on this top chart. And it took a couple of quarters and then it started to turn south. But as you can see, we're continuing to raise rates. The Fed is expected to continue to raise rates. They may do so at a smaller margin moving forward, but they are not going to stop, at least not yet. Now, with that, as you might recall, we had a huge unemployment spike. Misspoke there. We had a huge unemployment spike at the beginning of the pandemic. So the pandemic really hit in February of 2020 in terms of the lockdowns and such. And that's when we saw this huge unemployment rate jump up. And then it's been running back down all the way here. So basically anything under 4% has historically been considered full employment because candidly, 4% of the people aren't interested in working or aren't in a position that they wish to be working. And therefore, getting it much below 4% is very, very difficult. And we have, in fact, been below 4%, both prior to the pandemic and the lockdowns and since then. Now, all of this, however, has led to inflation. So inflation simply means, to really boil it down to its most basic item, that demands are outpacing supply. So as there is great demand and not enough supply, then up here in the upper left, we are getting this big price increase or these big inflation increases, especially in certain items. And if you have not looked at the breakdown of how different items have been affected by inflation much more dramatically than other items, take a look at the previous discussion I had, the first discussion coming out of the gates here in 2023 in January, and I break things down by some subgroups to let you see where inflation is spiking and actually in some cases where it's in fact going down. But overall, the inflation rate is this upper left-hand this upper left-hand view of this graphic as we've been discussing. Now, again, keeping in mind for unemployment, we've been coming down, but part of the fact that this demand is so high and the supply is so low, the Feds are increasing interest rates to try to slow the demand down, to make it more expensive for things to slow it down. The other impact of that becomes higher unemployment or layoffs in this instance. So this is interesting. Now, this is just looking at tech layoffs since COVID-19. So right here, this group of layoffs, and this is the red or orange is employees laid off. The blue is companies with laid off. As you can see right here, we had employees getting laid off to the tune of about 70,000 layoffs right in that quarter, with this numeric on the left-hand side coming from about 450 of the companies over here on the right-hand side. Now that spike coincides with this spike right here, just as we were discussing. Now what we're seeing happen is we're seeing a bunch of new layoffs taking place, starting down here basically in Q2 of 2022, and then through the back half of the year, hitting that high point in the Q4. But here we are already in Q1 of 2023, and we're seeing a large number of employees laid off. This bar right here is the number of employees being laid off, and that has spiked quite a bit here in January. So although that can be very painful for many people, from a Fed perspective, that would be actually viewed as a good thing. The fact that that jobs are not as easy to come by, and there is therefore that impact that the lack of jobs or jobs being more difficult is going to decrease some demand, allow supply to catch up. That softens the inflation rate and hopefully means that they won't have to continue to keep increasing the Fed funds rate to therefore try to slow inflation. So these four pieces kind of are giving you the four angles, the corners of the box, so to speak, as to what's going on in terms of inflation and what the Feds are hoping to see to try to cool that off. In terms of the markets themselves, if we jump over here to capitalization, as always, I show you this blue bar here, the total stock market view using the Vanguard ETF coming in here in the middle. So everything above this is helping to raise the market. Everything below this is pulling the market down, because this is essentially the average right here in the middle. So as you can see up here, we're seeing mostly small caps and mid caps. We've got the mid cap 400s and the small cap 600s. That's both the value and the growth showing up here, as well as the index itself. The only other item that we're seeing up here is the S&P 500 according to value. The index itself is down here, and growth on the S&P 500 is down here at the very bottom. But we are seeing right now that we are leaning or tilting towards a bullish standpoint in the overall market now, even in the macro. Even in the longest term view that we take in this view, we've got macro there, we've got nano here, and then we're showing you the tilt, which is kind of the average of it all put together, of all the different time frames put together. And right here in the very lowest right-hand corner, you'll notice there's just a couple of small green bars showing up here on this Vanguard. Again, this is the Vanguard Total Stock Market ETF. And those couple of green bars is what got us a green right here on the macro in this upper left area. So we did just turn the corner. So overall, as you can tell, macro-wise, the market has been going down, but we are getting this uptick right in here, and that's starting to potentially give us a turn. Now, we don't know what the future will bring. We're simply tracking reality, where things are, and right now we're seeing that turn on the overall capitalization, primarily being driven, as I mentioned before, by the small cap and the mid cap, as opposed to the large cap. Now, when we break it, the same market down by sector, and we take the equal sector weightings, so kind of the average of it all right here in the middle. What we're finding again is these sectors are driving the market up. These sectors are dragging the market down, so to speak. So we've got materials, telecom, industrials, financials, energies, and REIT, which is real estate, up here bringing the market up. And then we see the others bringing it down, with utilities being down here at the bottom. Now notice right here, we are getting two red numbers on the tilt. That means they're tilting bearish. So these bottom two, consumer staples and utilities, are actually tilting bearish, but the rest are showing us in the green, even though we've got some spotty red marks here, depending on which time frame we're looking at. Again, nano, micro, meso, macro. Macro is the largest, longest term view. Meso would be next in line. Micro starts getting to be kind of small, and then nano is our smallest viewpoint. And we are seeing, again, this market, these sectors have been coming down. We equally weight them. We see all this red that we've been going through. And then again, here's that same little patch of green in the lower right-hand side, which is depicted of this starting to move back in an upward direction at the sector level. Now, if we jump over to the bonds, on the bonds, what you'll notice is we're seeing all green here. All green coming in on the bonds, being driven primarily by corporate bonds pulling up the overall bond market, and treasuries or government pulling it down for the most part, the only exception being the long-term 20-year treasury. But up here, we've got all corporates showing up. And once again, we're seeing green in this lower right-hand corner here. You're seeing green just start to pop even on the macro. Because again, keep in mind, this is the connecting points here. We're looking at macro and nano. And then in the middle, we've got tilt, which is kind of that average overall. So once more, all of that red that we're seeing here down in the bottom, that's showing us how the market has been going in a bearish trend. And now we're just seeing some tipping up that's starting to win back over even that macro. And we saw some nano in here. But it took the macro a while to basically let those numbers start to catch up in the bond area. And then finally, here we're looking at international equities. And again, we're seeing a lot of green in this upper left. We're just seeing Latin America not necessarily keeping up on the macro and meso, but still overall even coming in green itself. But the total international market, again, is the graphic that we're looking at here. And here we're seeing the MSCI, the AFE, EMU, Europe is pulling us up. And then we're seeing Pacific and emerging markets and some of the higher dividend issues starting to pull things down, with the overall average still coming in here, and seeing it tilting bullish on macro, meso, micro, and nano. So again, international got into the green on the macro a while back, so more quickly is a better way to say that. Going back to basically December is when we saw the macro turn green on international. Prior to that, it had been all red, working its way down. The tilt started to turn green right about at the beginning of November. And again, some of the nanos started turning green back in here, middle of October, but then registered this dip as red. But now again, everybody is showing green here, tilting towards the bullish on international. So what this all is telling us is that the various governments, and managing their federal interest rates and their Fed fund rates and raising interest rates kind of across the globe, is starting to have an impact. It's starting to cushion down inflation in most instances, and it is starting to show some support for the stock markets across the globe as well. Look forward to talking to you again very soon.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.